Okay. All right, let's get this going. So the training that we're going to do today is on employees versus contractors. And I wanted to talk about this because it is a really important decision for a lot of small business owners to know how to build your team out, especially when you're early on. And there are quite a few different things to consider. So I wanted to jump in and talk about that. And then at the end, I'll open it up for any questions that anyone has, and we can go through any questions you have, whether it's on this specific topic or not. But we're gonna, we'll talk first about this employee versus contractor deal and what are the things that you need to consider when thinking through employees and hiring your team. So let's jump in. The first thing that you need to consider when you're hiring someone is the idea of self-employment taxes versus payroll taxes. So from the employee side, most of us are familiar with payroll taxes being taken out of our paychecks, right? We've all been there, had the W-2 job where we get Social Security taken out, Medicare taken out, and withholdings taken out. As the employer, you've got to think through all that on the employer side. So there are a couple of things going on regarding payroll taxes. So total payroll taxes are 15.3%, and half of those are paid by the employee and the other half are paid by the employer. So if you're going to hire employees, you've got to be aware that you have to go through the steps to withhold the employee's portion and then to add on your portion, which is like 7.65%, and then remit those together up to the IRS. And that is a critical element of this because it's an extra cost to you. So if you're going to hire an employee and you're going to pay them, let's just say, I don't know, let's pick an easy number. You're going to hire someone, you're going to pay them $20 an hour. Your cost is not just the $20 an hour, it's the $20 an hour plus the payroll taxes. And what we've gone over is just the federal piece. I'm going to talk here in a second about the state piece as well. Generally speaking, you'll need to add about 8 to 10%, depending on what state you're in. And you can see the majority of that, right? We're 7.65% of that amount is just the federal taxes. So the state taxes don't end up adding up to a lot, but there's something, and you have to factor it in. So generally, again, 8 to 10%. Usually we err on the safe side and would calculate 10% if we're kind of estimating how that's going to go. So if you're paying someone $20 an hour, it's going to the cost to you is going to be a little bit higher than that. It's going to be $22 an hour after you factor in those extra costs associated with having the employee. So that's the piece on payroll taxes. In order to actually go through and register those taxes, there are a couple of places you have to register. The federal side is actually pretty easy. So let's just say registration. On the federal side, all you need is an EIN, and you probably already have one. If not, you can register for one very easily on the IRS's website. But the EIN is all you need for the federal employment taxes. And so the same number used to file your tax returns. Most companies already have one. There are two different forms you'll have to file for the federal. It's a 941 and a 940. But honestly, most payroll companies are pretty good at handling that for you. The federal side, aside from the actual money piece, is pretty easy. On the state side, so for most states, you'll need 3 different things. 2 of them are directly with the state, and that is unemployment insurance. So you'll pay a little bit of that federally too, but for the most part, that's a state tax. And so you'll pay that. You have to register usually for an unemployment insurance account with your state and pay some tax there. And then the other one is withholdings. And that's just, holding out some state taxes. If you're in a state with no income tax like Texas or Florida, obviously you don't have to worry about that one. And then the other one for the state, which is not usually directly with the state, but the state will require it. And it's a big one. It's the work comp insurance. And that's just a type of insurance. So usually you'll go to a work comp insurance provider and actually get that insurance set up. But this is basically your checklist. If you have an employee, you need to make sure that you're doing, that you've got all of these different types of taxes set up and you're registered for those accounts. Now, that's kind of a hassle, right? So now I want to, at the end, I'm going to circle back. I'm going to have the discussion, or I'm going to, weigh some of the pros and cons of hiring an employee versus going with a contractor and what things you should consider there, because it really shouldn't be discounted here that you have a lot of costs. And one of the other potential costs, which especially sneaks up on small business owners, is related to hiring an employee out of state. And that's the second item that I want to talk about, which is something called Nexus. And Nexus just means that your business has a presence in a state. So if you're in, like Thomas, I see you're on here. I know you're in Arizona. So your business automatically has a presence in Arizona. You have Nexus in Arizona because you're formed there. I'm in Utah, so I automatically have Nexus in Utah. But I have a team member who's in Illinois. And because I've hired that team member in Illinois, that gives me now Nexus in Illinois, which means that Illinois is going to require me to register with them, to create all those payroll tax accounts, but also now my business has to file a tax return in Illinois. And because it's a pass-through entity, sometimes that could mean that I personally would have to file a non-resident return in Illinois to claim like a portion of the business's income in Illinois, even though I don't live there, even though I really have no connections there aside from having the employee there. This is a key factor. So the big one is like for a lot of business owners who live in these non-tax states. So if you're in Texas or if you're in Florida, those are the most common ones, not the only ones, but if you're in one of those two states or even Tennessee, and you're not accustomed to having to file state income tax returns, and you register, if you hire an employee in especially one of the high tax states like California, you have to understand that means that you're now doing business. Your business now has a presence in California because you have an actual employee there. That means that you're subject to all the California laws for anything that happens within that state. And it also means that you have to pay a California franchise tax for your business. It means that you have to file a tax return. There we go. It means that you have to file a tax return in California as well. And it's not that all of your income will be subject to California tax, but you do something called apportioning it. And you'll basically go through kind of a big calculation and figure out how much of your income is subject to California tax. And then based on that, you'll have to file a return there. So this Nexus piece is a big deal. And it's really something that gets overlooked very frequently. So if you're thinking about hiring a team member and they're in a different state, then you've really got to think extra hard about whether or not it makes sense to hire them actually as an employee or to hire them instead as a contractor. And that's what I'm going to talk about next, because it really is an option. And, I was just saying, I have a team member who's in Illinois. That trade-off for me was worth it in this case. And so I ended up hiring them as a team member or, as an employee in Illinois, knowing full well that was going to give me Nexus. It was going to mean that I had to file a tax return in Illinois with all that downstream stuff. So I'm not saying that you should never hire an employee out of state, but you should be aware of what the consequences are. I have another employee, I gotta watch my language there, another team member who is in a different state. And with that team member, I was able to negotiate something where they are a contractor. And that way I don't have to worry about Pennsylvania taxes. Pennsylvania taxes are pretty annoying. They've got not only state level, but local level taxes. So sometimes it might make sense. Sometimes it might not make sense. And you have to figure that out. But again, just understand that nexus piece as an important issue. Okay. So now with that said, as an important issue, how do you determine whether or not you should hire someone as an employee or a contractor? There are a couple of things that go into it, but first I just want to walk through the math, because as the employer, the way that you position this to the potential hire, if you're thinking about hiring them as a contractor, is important. I'm going to run through a couple of numbers, and let's just say that you have a team member who you're going to pay $50,000 a year. So that team member at $50,000 a year, you could pay them as an employee. If you pay them as an employee, then you're going to pay that 10% in extra taxes on top of that. So to pay them $50,000, it's going to cost you about $55,000. And then the employee of that $50,000, they're only going to receive, that extra $5,000 that you're paying for them they don't get anything for that. It's just a required tax. Instead, they also have to pay some of those taxes. So they're only going to get about $45,000 of the $55,000 that it's costing you, right? So that's the gap there, right? You're paying tax, so $50,000 costs you more, and they're paying tax, so of the 50, they get less. If you pay them as a contractor, a couple of things happen. So first, $50,000 really costs you $50,000, and generally speaking, but you're also shifting the entire burden of employment taxes over to them as a contractor, and that's important to understand, right? We want to be like fair to people, and we want to treat people well. So what I always recommend is it would cost you $55,000 anyway, right? If you hired them as an employee. So if you're going to hire them as a contractor, go in and be willing to pay them the $55,000 so that it makes it makes your life easier, but you're not trying to get away with something. You say, hey, I'm still willing to pay you the amount that it would cost me as an employer. So I'll pay you $55,000 instead of $50,000. Then if that employee does something like setting up an S corporation to help get rid of some of those taxes, then now it gives them opportunities to write things off that they wouldn't have been able to write off before. So now they can write off their cell phone. Now they can write off their internet. Now they can write off maybe some of their car, maybe some of their home office, all these things that they wouldn't be able to write off as employees. Let's just say that, in theory, this gets them, they've got $5,000 of expenses things they're spending money on anyway, that now they can write off that they couldn't before. So now they're back down to a taxable income of 50, even though they've gotten cash of 55. But they've got this 15.3% self-employment tax. And what is that? 7,600, something like that. So they've got this $7,600 in tax here. Well, that's fine, because even if they paid that entire $76,000 or $7,600 in tax, their actual cash is still what's 55 minus that 48,400. Yeah. So their actual, you can see like they're still better off here, because you've taken what you were going to pay anyway. You're in the same spot, except you don't have to register in their state. They get to write some things off and eat away a little bit at those taxes. And now they are still, here they've got $3,000 more in their pocket than they would have had if they were just an employee. So a lot of times, like on the math on this works out better for everybody if they're a contractor, but that isn't always the best case, right? Some people just don't want to, some team members might just not want to deal with it. They might not be comfortable with it. They might not understand the math and feel like you're taking them, for a ride or taking advantage of them in some way. And that's fine. That's just stuff that you have to weigh out, but you should understand the math, and where possible, you should be able to explain this to your potential team members so that you guys can have this discussion and say, hey, look, if we agree that you're going to work this way, then this is what the math looks like, and you can actually come out better in that circumstance. The other piece here is there's the whole other question of benefits. So I'm not even going to get into that, but obviously as an employee, there are you can provide benefits. And this side, none. But again, those are all things that you can do the math and have those discussions and figure it out. The main things you need to consider when hiring an employee versus a contractor is this going to come after you? Because the state, especially the states want you to hire employees. They don't want you to hire contractors. And they will come after you if they think that you're hiring contractors when they should be employees. So you've got to understand the definition of a contractor versus the definition of an employee. So a contractor has the ability, so let's say contractor and employee. The contractor has the ability to work for, like you are a client to them, so they can have multiple clients. So it means non-exclusive. Now, that just means that they have the option. You might still be filling up all their time and they don't actually do it in practice, but they have the technical option to. The other thing is they will have as a contractor, they have freedom over their time and when they work. So schedule is a big one. If they need to be clocked in every day between, certain hours, then that's not a contractor. Employees have fixed schedules. And the other one is equipment. Are they using their own equipment or are they using your equipment? If you're buying them a computer and you're buying, whatever, buying a desk and buying whatever, then they're using company equipment. And generally speaking, that means they're an employee. So understand, and every state has a little bit different rules. So look up the rules in your specific state, but these are the kind of the general principles. The other thing you can do is set up an agreement. So whatever way you decide to go, you should always have some kind of agreement, and that can be either a contractor agreement or an employee agreement. And having them sign the agreement one way or another will make sure that everyone is very clear on what type of relationship this is, and it protects you in case the state does come challenge you and say, hey, we think that or we just want to see more. That's really more often they'll do random audits, right? And they'll just check and say, hey, we just want to make sure that you're not reporting employees that you have. But the other beautiful thing about a contractor is it doesn't give you nexus in those states. So same example, me with my team member, what's going on? Okay, me with my team member in Pennsylvania, I don't have to register my business anywhere in Pennsylvania. So Pennsylvania doesn't really know I exist. So they're not ever really going to come after me because I don't have nexus there. I don't have any presence there. There's no reason for them to even know that I'm not doing business in their state. I just happen to have a subcontractor who is doing business in their state. It has nothing to do with me. So you're not even on their radar. And that's a huge advantage of the contractors. It's just less states, less governments to know that you have to register with and say, hey, I'm here, and then wait for them to eventually decide to come after you. So I would really encourage most small business owners to think really hard about before hiring employees in other states aside from the state where they're at. we'll simplify the kind of tax burden for you, including not just dollars, but that also, but I mean, just as importantly, just the number of states that you have to deal with, the amount of tax returns you have to file in all those different states. So where possible, try and negotiate this with team members. Say, hey, can I just pay you as a contractor? Run through the math with them, and then help them understand that, like, you're not trying to hose them or take advantage of them in any way. You're just helping them in something that's mutually beneficial. They end up with a better tax situation. You end up with a better tax situation, and everybody is happy. But you just have to, again, know the rules, set the agreement in place so that you're not doing anything that isn't legally correct, and then you're off to the races. So that really is, let's see, let me just check my notes. That is about all that I wanted to go through on this subject. I wanted to open it up if anyone has questions. Otherwise, I think we're about done. So any questions on this topic or any other topic? And you can either put it in the chat, or if you want, I think, yeah, you can raise your hand and we can allow you to talk directly, and you can ask your question that way. So any questions? I'll just give it a minute here. Thomas. Okay, great. Hey, Thomas, I think you're muted, but yeah, go ahead.
I think I'm unmuted now. Can you hear me?
Yep.
Yeah, thank you for the info on this. I learned a lot. I didn't really know the difference on the Nexus piece, and that's really interesting. It sparked another question for me.
Yeah.
Flip that to the client side. Are there similar situations as far as your payment and filing returns in those other states and that kind of thing too?
As you're saying, if you have clients in another state,
right?
Okay, it varies by state, but
Okay.
generally speaking, there was a court case that was passed, or that that went through, that sort of set the precedent for this, and most states follow that precedent, and it's called like the Wayfair case. So most states, not all states, but most states kind of take that as their kind of North Star for like setting up how they determine if a company has Nexus in their state. And the general rule is like 100 transactions, it might be 1,000 transactions, or $100,000 of revenue coming from that state gives you Nexus in that state. So there are 3 ways that you can have Nexus. This is a little off topic, but let's circle back to this idea of Nexus, right? There are 3 ways that you can have Nexus in a state. The first one is if you have employees, right? We just talked about that. That automatically gives you Nexus. 1 employee, boom, you're there. The other one is you can own physical property in the state. So if you're not you individually, but if your company were to buy a building in a state, or even theoretically, like I don't know, a car could be personal property, like any sort of property also gives you Nexus, like physical property. And then the third one is sales. And sales is what you're talking about with customers. And generally speaking, the threshold for most states is the $100,000 or more of revenue from that state specifically. That would give you Nexus in that state. Now, this is important for two different reasons. The first one is income tax, right? That would give you Nexus there, and you would need to theoretically register there. And then the third one is, the second piece is sales tax, because different states have different sales tax rules, and some states will tax different things, including services, especially services on things like websites. So it's important to kind of keep that in mind. But with that said, it's another one of those deals where this is probably the sales is the squishiest of these. Physical property is pretty straightforward. Having an employee is pretty straightforward. The sales thing, how is California going to know if you have a couple of clients there who are doing sales? How are they going to know if that's over 100,000 or under 100,000 or over 100 transactions or under 100? They're not going to have any idea. So realistically, for most small businesses, there's a technical threshold that you would cross, but there's like a practical side of it. And practically speaking, not many people are going to sort of raise their hand and volunteer and say, hey, California, just want to let you know, I'm over this threshold. And so now I'm going to start filing tax returns with you and withholding sales tax and remitting that to you. Does that make sense?
Yeah, it does. It's kind of like the paying when you have to self-report paying sales tax on something you buy. It's kind of like that in a way.
Yeah. Yeah.
Okay.
Oh, yeah. Great analogy there. Yes.
Okay. Yeah, that makes more sense because I'm afraid of those things not knowing how that would actually work, but it's basically you'd have to be doing a lot of business in that state to be worried about the taxes, basically.
Exactly. It's really meant to kind of catch the big companies, right? So, Microsoft, even if they don't have an employee that's like an extreme example, but they're going to have Nexus in every state just because they have sales that are over those thresholds in all the states. But for most small, even to mid-sized businesses, it's, that state doesn't even know you exist, and there's no reason to really volunteer to report to them.
Gotcha. Just keep the records just in case, but obviously.
Yeah. Well, again, practically speaking, most small businesses this isn't even a consideration on an annual basis as far as the state side specifically. They're not even tracking sales by state until and unless one of these other two items triggers Nexus in that state. Does that make sense? Like if you were to hire an employee, just to pick like a random state in Missouri or something like that. If you were to hire an employee in Missouri, now you've got to track sales in Missouri, because that's when we're figuring out how much income to attribute to that state. Like you've tripped the wire because of the employee. Now we've got to look at all three of those things. But where you don't trip the wire with one of these first two, sales, we usually just don't even worry about it. You just report it in your home state.
Okay. That's very good to know. Thank you for clearing that up.
Yeah, you bet. Any other questions?
For now, I think that's all I have.
Okay.
This is great timing for me. Basically, I'm getting running in July, so this is great timing to have this kind of to ramp up for that. So
that's great. Awesome.
Yeah. There are more I will need to talk to you about, obviously, but for a different call.
Okay. Yeah. Don't hesitate to reach out.
Awesome. Thank you.
You bet. All right. Any other questions? We'll kind of hang out for a minute. If not, I think we're good to wrap up. Okay. Speak now or like not forever, but hold your peace. Okay. Thanks everybody. Have a great rest of your day.
Yeah, you too, Brian. Thank you. Have a good holiday.
You too.
Thanks.